Imagine waking up every day with the freedom to do whatever you want. No alarm clock, no commute, and no boss breathing down your neck. Sounds like a dream, right? Well, achieving that level of financial freedom is closer than you might think. Today, we're going to explore 5 incredible assets that can pave your way to never having to work again. Whether you're looking to build a steady stream of passive income, diversify your investments, or protect your wealth, these assets have the potential to transform your financial future. So, grab a cup of coffee, sit back, and let's dive into the world of smart investing. So, you want to reach a point where you never have to work again, right? We're talking about achieving true financial independence, and I know it sounds like a dream, but it's totally possible with the right investment strategy. Imagine having the freedom to do what you love without worrying about money. Today, we're diving deep into 5 assets that can help you get there. Let's explore how these investments can set you on the path to financial freedom. First up, we have real estate. It's a classic, and for good reason. When you buy a property, whether it's a rental home, a multi-family building, or even commercial real estate, you're not just purchasing a piece of land or a structure. You're buying a stream of income. Think about it. People will always need a place to live and work, so if you own property, you can collect rent every month. The beauty of real estate is that it can appreciate over time, meaning your property could be worth more in the future than it is today. Plus, with the right tenants and management, you can enjoy relatively passive income. Now, you might be wondering about the initial cost. Yes, real estate can be pricey upfront, but there are ways to mitigate that. You can look into financing options, house hacking, or even investing in real estate investment trusts, REITs, if you don't want to deal with the physical property yourself. REITs are companies that own, operate, or finance income-producing real estate, and they're a great way to invest in real estate without the hassle of property management. Next on our list is dividend-paying stocks. Imagine getting a paycheck just for owning shares in a company. That's essentially what dividends are, a portion of a company's earnings paid out to shareholders. Companies that consistently pay dividends are often well-established and financially stable, making them a solid choice for long-term investments. And the best part? You can reinvest those dividends to buy more shares, which in turn can produce even more dividends. It's a powerful cycle of growth. Consider looking into blue-chip stocks, which are shares of large, reputable companies with a history of paying dividends. These companies are usually leaders in their industries and have proven track records. While stock prices can fluctuate, the consistent dividend payments can provide a reliable source of income, helping you inch closer to financial freedom. Let's talk about bonds now. They might not be as glamorous as stocks, but they play a crucial role in a balanced investment portfolio. When you buy a bond, you're essentially lending money to a government or corporation, and in return, you get paid interest. Bonds are generally considered safer investments compared to stocks because they offer more predictable returns. Government bonds, especially, are viewed as low risk since they are backed by the government. Municipal bonds, for instance, are issued by local governments and often come with tax benefits, which can make them even more attractive. Corporate bonds, on the other hand, might offer higher returns but come with a bit more risk compared to government bonds. The key is to find a balance that aligns with your risk tolerance and investment goals. Bonds can provide a steady income stream and add stability to your investment portfolio. Another powerful asset to consider is mutual funds and ETFs, which stands for exchange-traded funds. These are collections of stocks, bonds, or other securities that you can buy into, and they offer diversification right out of the gate. Instead of picking individual stocks or bonds, you invest in a slice of a larger pool of investments. This diversification can help mitigate risk because you're not putting all your eggs in one basket. Mutual funds are managed by professional fund managers who make decisions about which assets to include in the fund. ETFs, on the other hand, often track an index, like the S&P 500, and are traded on exchanges like individual stocks. Both options can provide exposure to a wide range of assets, making them a great choice for investors looking to build a diversified portfolio without having to actively manage it themselves. And let's not forget about precious metals like gold and silver. They've been considered a store of value for centuries and can act as a hedge against inflation and economic instability. When the stock market is volatile, precious metals often hold their value or even increase in value, making them a great way to diversify your investment portfolio. You can invest in physical metals, such as coins or bars, or through financial products like ETFs that track the price of these metals. Now, some might say, but why invest in gold or silver when they don't produce income like stocks or bonds? That's a fair point. Precious metals are more about preserving wealth than generating income. However, having a portion of your portfolio in these assets can provide a safety net during times of economic uncertainty. They're a way to ensure that your wealth maintains its value, even when other investments might be taking a hit. Cryptocurrency is another asset that has gained a lot of attention in recent years. Bitcoin, Ethereum, and other digital currencies have shown incredible growth and have become a legitimate part of the investment landscape. Cryptocurrencies are decentralized, meaning they aren't controlled by any government or financial institution, which can be appealing to investors looking for alternative assets. However, it's essential to approach crypto with caution. The market is highly volatile, and prices can swing dramatically in short periods. It's not uncommon to see double-digit percentage changes in a single day. That said, many investors have found success by holding onto their crypto investments long-term, riding out the highs and lows. If you're interested in crypto, it's wise to start small and never invest more than you can afford to lose. One more thing to consider: your own skills and education. Investing in yourself can be one of the most rewarding assets of all. Whether it's through formal education, learning new skills, or personal development, the knowledge and abilities you gain can open up new opportunities and ways to generate income. For example, learning about investing, real estate, or even starting a side business can provide additional revenue streams. Taking courses, reading books, and attending workshops or seminars can all contribute to your personal growth and financial knowledge. The return on investment from educating yourself can be immense, as it equips you with the tools to make informed decisions and potentially earn more money in the future. As you consider these assets, remember the importance of diversification. Putting all your money into one type of asset can be risky, so it's crucial to spread your investments across different asset classes. This way, if one investment underperforms, others might pick up the slack. Diversification helps balance risk and reward, providing a smoother path to financial independence. Setting clear financial goals is also vital. Knowing what you want to achieve can help you make more strategic investment decisions. Do you want to retire early, travel the world, or simply ensure financial security for your family? Whatever your goals, having a plan can guide your investment strategy and keep you focused. And let's not overlook the importance of patience and discipline. Building wealth and achieving financial independence takes time. It's not about getting rich quickly, but rather making consistent, smart decisions over the long term. Stay committed to your investment plan. Regularly review your portfolio and make adjustments as needed to stay on track. Finally, don't hesitate to seek professional advice. Financial advisors can provide valuable insights and help you create a personalized investment strategy tailored to your goals and risk tolerance. They can assist with everything from choosing the right assets to managing your portfolio, ensuring you're on the right path to financial independence. By investing in real estate, dividend-paying stocks, bonds, mutual funds and ETFs, precious metals, cryptocurrencies, and yourself, you can build a diversified portfolio that generates multiple income streams. This diversified approach can help protect you from market volatility and provide a steady flow of income, bringing you closer to the goal of never having to work again. Remember, the journey to financial independence is a marathon, not a sprint. Stay focused, stay informed, and keep pushing forward. So there you have it. By investing in real estate, dividend-paying stocks, bonds, mutual funds and ETFs, precious metals, and even cryptocurrencies, you can build a diverse portfolio that works for you around the clock. Remember, the key to financial independence is not just about making money, but making your money work for you. With patience, smart decisions, and a bit of guidance, you can reach a point where working is a choice, not a necessity. Looking for the best products at unbeatable prices? Look no further. Join SWE Official on TikTok and be part of a community that loves quality and savings. Get access to special offers and discounts you won't find anywhere else. Don't miss out on these amazing opportunities. If you found this deep dive helpful, make sure to like, subscribe, and hit the notification bell so you never miss out on more tips and strategies to achieve financial freedom. Here's to a future where you can wake up and do exactly what you want every single day. Thanks for watching.